A look at the Forex markets for Monday, the 29th of September. This is the Euro US dollar. I'm showing you the daily chart and also the hourly chart there on the left, just for a shorter term perspective. But really, this just continues low. We've been sticking with the bear trend for quite a while now. Once we broke below some important trend line support around the low 129 area anyway, which had held initially at the beginning of September, but once we broke through there the week before last, we've just continued lower, and of course that then acted as quite good resistance, that lower 129.00 area last week. So it's all very much fitting in with the bear trend, and we've closed near the week's lows, down around, let me see, what was this low? 126.75 was the low. We closed very near that on Friday, so a week close on the week and a week close on the day. It doesn't look good. We broke below last year's lows at the end of last week. That was 127.45. We got through there without much of a problem. So really, the outlook just remains negative. There's nothing really more I can add to that, unless we can get a decent recovery and hold above last year's low at 127.45. I would suggest that we stick with the bear trend and look for this to continue lower. With that Scottish referendum out the way, cable has now finally decided to break lower. There was a bit of indecision at the beginning of last week as we just hovered, didn't really know where to go, and then finally the break below this, what now appears to have been a bear flag, just a little rally in a bear market. Now that we've broken that, we should continue lower. The strong dollar seems to be the theme across the board, and that's likely to continue. We're probably going to retest September lows at some stage down in that low 160.50 area, and a break below there of course would then start the next leg lower. So the important levels are on today's report, but it certainly does look negative for this pair now that we've broken down. Gold chart, daily chart, going sideways. There is this little double bottom pattern which I'm wondering, after such a steep move to the downside, will signal a short-term recovery at least. I like this candle on Thursday, the spike off the previous low, which was 12.08. We bounced from 12.07 on this one on Thursday. Nice big spike up, nice blue candle. We even closed almost above the open on, well, we closed near the open on Wednesday, so that was quite positive. The question is now, can we hold above this 12.08, 12.07 area? If we can, of course, we can build a recovery, break lower. Well, that's the end of that. That would just signal that we were taking a pause, catch a breath in an oversold market. You can see we're no longer oversold. We've unwound that now, so there is a risk that this will break lower. It's not the most positive formation, but it is at least a little double bottom with at least one positive candle. There is hope. We really can't get more positive until we get above 12.30, and of course below 12.06 we're going to be negative again. We're starting to cover some new markets this week. This is silver. Silver last week broke below 2013 lows, which were at 18.50. So we've plunged through there and got into the low $17 area. Doesn't look very good. Not really the same sort of bottoming pattern that we've seen in gold here. A slight double bottom, but nowhere near as convincing. So really, it does make me worry that gold won't be able to sustain a bounce, and it does look like silver will just continue lower. And I think selling into any strength looks like the best scenario. Just to emphasize how steeply this bear trend is working in silver, this goes back to the middle of July, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. We've gone down almost every single week for 13 weeks. Even the week that we didn't go down was just an unchanged week. So this really is a very steep bear trend for silver, and not really one you want to get in the way of at the moment. Aussie also getting a battering as the strong dollar pushes this pair lower. We're heading towards this year's low around the 86.58, 86.75, 86.60 area, shall we say. It looks like that's going to get tested at some stage, and a break lower would of course increase the selling pressure if anything. It's been a very steep slide since this head and shoulders pattern that we warned you about when we expected a break lower, and it's just been south ever since. So let's see what happens when we test this year's low at that 86.75, 86.60 area. If that doesn't hold, then of course there'll be extra selling pressure to continue this bear trend. Not a big surprise that the dollar's been strong against the Japanese yen. The last week, however, we did hover in between these nice Fibonacci levels, and if we were trading those levels, that just worked perfectly really, trading this range. Maybe a little bit more range trading. I don't really see this as a topping pattern. You could argue that this is a double top here at around the 9109 45.50 area, but I don't really think that is the case. I think this is just going to be a pause in the bull trend, and eventually we'll break higher. When, I don't know. So in the meantime, we'll trade those ranges, and if we do drop lower, there's some buying opportunities down in the 107.60, 65 area. If we get down there, I don't know whether we will, but the rest of the levels are on the report, so we can trade around the levels and make some money until we wait for the break up. Euro versus the British pound is another market I'm starting to cover this week. You can see it's been going down for days. Euro's been battered against the pound. We're getting very close to 2012 lows of 77.53. Looks like that could get tested this week, in fact. Let's see what happens there, but this downtrend is very strong, certainly over the last couple of weeks, and I don't think it's worth betting against that at the moment. We've been in a bear trend now for a couple of years really, and I don't really see that changing. We're starting to cover copper as well this week. As you can see, copper's been in a bear trend now for at least 2 months, and that also looks likely to continue. I think that this range trading that we saw in the last 4 days of last week is just taking a breather in an oversold market, but I think before long we'll break lower again. Doesn't look too good, and we could head down towards the let me see now, these are June lows around the 3000 level.